Have you ever wondered what separates a successful trader from an unsuccessful one? It's not just about charts, trends, or market analysis, it's about something much more fundamental: the mindset of the trader. In the world of trading, your mindset can be your most powerful tool or your biggest obstacle. It's the lens through which you view the market, influencing every decision you make. This is why understanding the trader's mindset is so crucial. Now you might be asking, but how can I cultivate this mindset? Well, that's where the book Trading in the Zone by Mark Douglas comes in. This book provides invaluable insights into the mindset of successful traders, offering a roadmap to help you navigate the unpredictable seas of trading. It's not just a guide, it's a journey into the psyche of the successful trader. So, buckle up and get ready. Join us as we delve into the world of trading, exploring the mindset that can lead to success. Now let's dive into the heart of Trading in the Zone by Mark Douglas. Trading in the Zone is not merely a book, but a guide to the inner game of trading. It's authored by Mark Douglas, a man who dedicated his career to coaching traders and truly understood the importance of the psychological aspect of trading. Douglas was regarded as the guru of trading psychology, and his insights continue to resonate with traders worldwide, even after his passing in 2015. In the fast-paced world of trading, where fortunes can be made or lost in the blink of an eye, Douglas's book stands out for its focus on the trader's mindset. Instead of charts, graphs, and numbers, Douglas emphasizes the significance of beliefs, attitudes, and mental strategies. The key theme of Trading in the Zone is that a trader's mindset can be the difference between success and failure. It's not just about the knowledge of the market, it's about having the mental resilience to stick to your plan, to not let fear or greed derail you, and to keep your emotions in check. Douglas suggests that the world of trading is less about predicting the market and more about managing risk and managing oneself. He emphasizes that a successful trader is not one who can predict the future, but one who can act without hesitation when the conditions of his strategy are met. The book is packed with thought-provoking insights and practical advice on how to cultivate this winning mindset. It teaches traders how to think in probabilities, how to deal with uncertainty, and how to make trading decisions without the paralyzing fear of making a mistake. Douglas believes that a successful trader operates on a different mental level. Let's explore this further. Douglas introduces us to the 5 fundamental truths in trading, but what are they? Well, the first truth is the realization that anything can happen. There's no certainty in the market. The market is unpredictable and full of opportunities. It's a vast ocean and we're just sailors trying to navigate it. The second truth is that you don't need to know what is going to happen next to make money. That's right, it's not about predicting the future. It's about recognizing patterns and acting on them. It's about taking calculated risks and managing your risk exposure. The third truth is that there is a random distribution between wins and losses for any set of variables that define an edge. In other words, even if you have a strategy that works 70% of the time, you can't predict which trades will be the winning ones and which will be the losing ones. You have to accept the randomness and keep executing your strategy. The fourth truth is that an edge is nothing more than an indication of a higher probability of one thing happening over another. An edge is not a guarantee, it's a probability. It's an opportunity, and it's up to us to recognize it and act on it. Finally, the fifth truth is that every moment in the market is unique. No two situations are exactly alike. Each moment is a new opportunity, a new challenge, and we have to be ready to adapt and respond. These truths might seem simple, but they are profound. They challenge our natural instincts, our desire for certainty and control. They force us to confront the reality of the market, to accept its unpredictability and randomness. And they remind us that success in trading is not about predicting the future, but about understanding the present and acting on it. These truths are not just principles, they are practices, they are habits, they are the mindset of the successful trader. These truths form the foundation of the successful trader's mindset. Consistency is key in trading. Douglas presents us with the 7 principles of consistency. These principles serve as a guiding light for traders who seek to achieve consistent results and maintain a steady mindset, especially under the unpredictable circumstances of the market. Let's delve into these principles. The first principle emphasizes that trading is not about being right or wrong. It's about making money. This principle urges us to detach our ego from the outcome and focus solely on the objective, profitability. The second principle stresses the importance of belief in our edge. An edge is a certain set of conditions that, when met, tilt the odds in our favor. It's what separates successful traders from the rest. Coming to the third principle, it's all about acting on your edge without reservation or hesitation. When your edge appears, you need to have the confidence to act. This principle teaches us to trust our strategy and execute it without second-guessing ourselves. The fourth principle is about dealing with losses. Losses are a part of trading, and this principle instructs us to predefine our risk and accept the possibility of a loss even before entering a trade. Then we have the fifth principle, which is about understanding the randomness of each trade. Each trade is independent and has an uncertain outcome. This principle urges us to treat each trade in isolation without letting the outcome of the previous trade affect the next one. The sixth principle is about the importance of being flexible in our expectations. The market is dynamic, and so should be our approach. This principle teaches us to adapt to the market conditions rather than trying to predict them. Finally, the seventh principle is about the power of consistency. It's not about making a fortune in a single trade, it's about being consistently profitable over a long period. This principle underlines the importance of patience and discipline in trading. Adherence to these principles can lead to consistent success in trading. Remember, trading is a marathon, not a sprint. It's the consistent application of these principles that will help you reach the finish line. Knowing the principles and truths is one thing, implementing them is another. As we delve into the fifth segment of our exploration into trading in the zone, remember that absorbing knowledge is merely the first step. In the realm of trading, the application of the 5 fundamental truths and the 7 principles of consistency is what truly sets successful traders apart. However, it's easier said than done. The theories might seem straightforward, but the practical aspect often presents a unique set of challenges. One of the most significant hurdles is the ever-present human element, our emotions. It's crucial to understand that trading isn't just a numbers game. It's also about managing your emotional responses. Fear and greed, the twin pillars of trading psychology, often cloud judgment and lead to ill-advised decisions. To overcome these emotional barriers, you must embrace the concept of probability. Remember the first fundamental truth: every trade is just a probability. It's not a guarantee of success or failure. This acceptance of uncertainty is what helps to keep emotions in check and allows for rational decision-making. The 7 principles of consistency, on the other hand, are all about developing a disciplined approach. Consistency in trading is not about winning every single trade. It's about following your trading plan with precision, regardless of the outcome. It's about understanding that losses are a part of the game, and what truly matters is the overall performance, not individual trades. Implementing these principles and truths is not a one-time event. It's a continuous process that requires constant reflection and adjustment. It's about being resilient in face of setbacks and persistent in pursuit of your trading goals. It's about understanding that the market is a vast, complex entity that's always evolving, and so must you. Remember, the market doesn't owe you anything. It's not about being right or wrong. It's about making decisions that are in line with your trading plan and managing your risk effectively. It's about being comfortable with the uncertainty and thriving in it. Implementing these principles and truths requires a shift in mindset. It's not just about learning new concepts, it's about unlearning old habits and reprogramming your mind to think like a successful trader. So, we've explored the mindset of a successful trader as outlined in Trading in the Zone. We've ventured through the labyrinth of trading psychology, highlighting the 5 fundamental truths and the 7 principles of consistency. We've learned that understanding the market is not just about analysis and numbers, but about cultivating a mindset steeped in self-awareness, discipline, and emotional control. The 5 fundamental truths reminded us that anything can happen in the market and that every moment is unique. They've taught us the crucial importance of accepting risk and not needing to know what is going to happen next, while always understanding the risk. We also delved into the 7 principles of consistency, emphasizing the need for a defined edge and a mental framework that promotes consistency. These principles are not just strategies, but a way of thinking, a mindset. Remember, in the world of trading, it's not just about the numbers, it's about the mindset.